Good afternoon, all you wonderful money masters and treasure hunters out there. Welcome to the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he's up at the New York Hard Asset Show. And folks, if you are in the New York area, please stop up there. Say hello to Tom. You can shake his hand, but if it were me, I'd be giving him a bear hug. So he's up at the Hard Asset Show for the next couple of days. And I don't know which facility. It might be at the Marriott Marquis up in New York City. So stop in there, say hello to him. And folks, I kick things off for TFNN each and every day, Monday through Friday at 9 a.m. If you haven't heard my show, you can always catch an archive of that show on Channel 9. Then Tom and I follow that up with a show called The Money Masters. We do that from 10 to 11, Monday through Friday as well. You can catch the archive of those shows on Channel 10. Now, thanks so much for listening to us on the radio. You can always, you can always watch us on Tiger TV, and you're going to absolutely want to watch us on Tiger TV because I'm here to teach you something. I'm absolutely here to give you some, what I would consider some really valuable information. In fact, today, probably more important than any other day, is a day of being able to provide you with really important information. Because for the next couple of hours, you will be underneath my care, guidance, and protection because I want to help you protect you, your assets. You can always give me a call at 877-927-6648. We had the Dow finish off 125 points, finishing out at 12. God, I wish I could see it. It looks like 12,695. We had the S&P finish down 15 points at 1338. The composite finish off 31 points. Small caps down 11. We're going to take a look at that. We're going to dive down into the S&P 500. We'll take a look at the health of the market, the health of the sectors out there. And before we start, Tom likes to start with his 4 agreements, and I like to start my shows, my days, with maybe some type of metaphor, some type of life lesson, and today we're going to be talking about news and information, if you will, and maybe some of it's going to be a little negative. Now, I am I am one of the most positive people that you will find on the planet. No matter what life throws at me, no matter what curveballs, no matter what negative stuff, I'm always able to turn that into a positive. But that doesn't mean that I bury my head in the sand and that I ignore what's going on. There were a lot of folks that were burying their head in the sand back in 2007 as the market went from its highs down to its lows. I absolutely know that doesn't include any of you, but I want to be able to provide you the information so that you can share it with your friends and family so that nobody buries their head in the sand anymore. Now, speaking of sand, when I take a look at the markets or I take a look at life, I like to look at metaphors. And to me, life or the markets here is really, the metaphor I'm going to use right now is sailing, because sailing to me is like a metaphor for life. And what I mean by that, folks, is did you ever wonder why we all start at the same place? Think about it. When we begin this beautiful journey that we're in this world, we are all starting the same place, yet we all end up at different destinations. Now, why do you think that is? A lot of times, is it the winds of circumstance? Because the winds are always blowing, folks. And the winds of circumstance, they blow at us continuously. Now, a lot of times people will say it's the circumstances in life. I beg to differ otherwise, because what guides us to our destination is not the wind. It's how we use the wind in order to set our sail. It's our thinking. It's the setting of that sail that makes a major difference in our outcomes in life. Think about that for a moment. You see, it's not what happens to us that changes the course of our life, such as the direction of the wind. It's what we choose to do when the wind direction changes. It's how we set our sails that takes us to our destination, folks. And when the winds change, what does that mean? That means we must change. We must reset our sail to steer us toward our destination, folks. The winds of the markets are always changing. And folks, the winds of the markets changed the direction on May 1st. It's now May 14th, and I ask you this one question. What have you done to reset your sail? What have you done to protect your assets? And what do I mean, folks? Usually, if you happen to catch the show on Friday that I did by filling in for Tom, what I was really focused on, folks, I was focused on the New York Stock Exchange. Most of the times you'll hear people talk about the S&P 500 stocks, maybe the Dow 30. Only 30 stocks out there. Maybe it's the NDX 100. I say take a look at the New York Stock Exchange, the breadth of the marketplace. And if you're looking at me, if you're watching us on Tiger TV, one of the keys that you should take a look, in my newsletter that I produce each day, I give a long-term outlook, I give an intermediate term outlook, and I give a short-term outlook. Well, one of the keys here, and we're going to go back and take a look at this on Tiger TV. Forget some of the other areas that I've got noted on my screen. What I want you paying attention to is I want you paying attention to the blue line and the red line. The reason is that, and this is a monthly chart that we're taking a look at, the blue line is the 50-day exponential moving average. We don't use anything simple around here. The red line is the 200-day exponential moving average. Now, I'm going to hover my cursor right now over this month, the month that we're in, May. And if you look in the upper extreme left-hand side of my chart, that blue line, the 50-day moving average is at 78.37. Now, I don't really use moving averages to trade, but I do use them as a guideline as to where the real direction of the wind is blowing in this market. So right now on the New York Stock Exchange, you've got the 50-day at 78.37 and change. Let's call it 78.38. Write that down, folks. The 200-day moving average is at 78.75. Today, and maybe it was Friday, but you certainly today have a crossover of that line. So that's what I want you to think. If you have a crossover, that crossing over that line, folks, if we go back and we take, and this is what's so important, is I know that 70% of you listening, your money is tied up in some type of IRA, some type of 401k, where the decisions that you're making are either to get in or get out. Maybe it's about 4 or 5 different funds that you can trade. And what I don't want you doing is I don't want you watching this market continue to move down because the 50-day is under the 200-day as we speak. Well, what does that mean? Well, if we just simply, I'm going to try to get rid of some of this. Oh, I got rid of the wrong thing out there. Well, that's okay. I'm going to go ahead and be able to put that back up on the screen here. So give me a second here. We're going to go ahead and put the 50-day and the 200-day on a monthly basis back up on the screen. It'll give me just a moment here to punch that in there because you may need to be making some changes, or you may at least need to be setting your sail, getting ready to make some changes, because you can always get back into a market. What I don't want you doing is I don't want you in a market wishing that you were going to get out. The last time that we had the 50-day cross through that 200 was back in July 2011. July 2011, even when the month closed, the New York Stock Exchange closed out at 80.79. Traded all the way back down to the lows in October 2004 when it got down to 64.14. That was a ride that certainly was no fun. You could have got back in. You could have got back in maybe in January when it crossed through. Okay, when it crossed back over. When the blue line crossed to the top of the 200-day moving average. Let's go back and take a look at other times, though. I'm going to take this back. In fact, let's take a look at what happened as we came off the highs, or the market, when I say we, came off of the highs in 2007. You had a crossover December 31st, 2007, where the 50-day crossed through that 200-day moving average. Now, I'm spending more time than I ever really have on the moving averages, but that's because I know that 70% of you out there, you're longer-term investors. You're not there trading, so I can talk about the AB equals CD patterns, and I'll absolutely do that. We'll take a look at swing points. But right now, today, I believe that we're really at a critical area. We're at a critical area for you to be thinking about how to set your sail. Now, I want to show you how the wind is blowing. I want to show you a technical indicator that no matter what trading system you have, you can place this on there. And so if you take a look in 2007, when that crossed through, your first signal that the market was going to be starting to turn downward came in December 2007. Now, the New York Stock Exchange then closed at 97.40. Do you realize going into 2009, it traded all the way down to 41.81? I don't want you, I don't want any of your friends, any of your family to ride that roller coaster down. It's come back. It came back maybe about 70% or so off of the lows from March 2009. If we go back in history, folks, I'm taking you back into the let's see how far back can we go. We can go back to 1972. 1972 as it crossed over. Folks, that would have saved you a bundle. 877-927-6648. Give us a call, folks.